Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now today we're going to look at the metals. How are the metals performing? What's gold doing? Silver, platinum, palladium, copper. Maybe we'll even touch on the nickel chart, all based on chart analysis. No hype, no BS, just charts. So let's dive into the gold chart to start off with. We are seeing gold behaving as it should right at a major trend line. Now, what's so fascinating about this, if you look at this chart, what does it look like? It looks like you have this amount of action on the upside and then almost an equal amount of action below the line, as if this is the dividing line, divide and conquer, right? So ultimately, we have action here, equal amount of action here, and now the question is, which direction does gold go? Now, one thing I do know is that gold could continue to trend up, but if it's going to get the bigger, faster gains, it must take out this trend line currently sitting around the 3,700 marker, maybe just above 3,700. So we are seeing a pullback the last couple days. We had a topping tail about a week ago. That was negated, so that bearish signal is no longer intact. But notice where that bearish topping tail occurred. It occurred right at the trend line, right? So again, the trend line appears, based on technical analysis, to be the dominant factor in keeping price below the current levels. Essentially, this is the resistance marker that a bull has to monitor, as well as a bear, to determine which direction gold will go in the near term. Now, listen, longer term, if we were to kind of look at this and just stretch it out, I mean, gold can still go higher and stay underneath that line, right? So again, it could be easily at 4,000 by November just by bumping up against the underbelly of this line. But in the near term, this is what is creating this little bit of sell-off action in the gold chart. Now, one thing we want to monitor is that we've got a 2-day pullback in gold. On a short-term basis, this chop here creates support. And if you look at the low today on gold and we put a trend line right there, what does this tell us? It tells us that this was where it kind of struggled to go up. It finally went up. Now, when it comes down, this becomes support. So you could argue this was resistance. It was struggling to push up. It finally broke above, negating that topping tail high right here of this candle. And now as it comes down, this now becomes technical support. Now, it's only a minor level of support, so we don't want to get too crazy about it, right? In other words, we want to monitor here because you could extend this out, and essentially what you have is a range on gold, right? It can make a new all-time high, and then it can come down. All-time high, come back down. So what we're watching now is watch very closely the 3625 level, $3,625. If that were to break, then it opens the door to a bigger corrective move, in which case you start expecting probably somewhere in the range of around 3,500, that former all-time high right here, these pivot highs right throughout this zone. All right, so again, while this level may not be a massive level, it is a good pivot level to guide us to whether or not we're going to see a very small correction with further upside in gold, or if we're going to kind of get a bigger breakdown where we all get to potentially buy at a cheaper level before it continues on its upward trajectory. And I think that's important to understand, is that whether you're short-term or long-term, obviously short-term you can have ups and downs, and that's what I trade predominantly as a day trader and a swing trader. But as a mid to long-term investor, the bias continues to be up. I mean, again, you can't have what's going on with the Fed cutting rates and the economy weakening and all these other factors, and then the U.S. debt continuing to expand, and not be longer-term bullish on gold as a metal that is rare, precious metal, right? So that's what I'm looking at right here. So we have a very clear basis for knowing where resistance is, currently around 37.15 to 37.25. Support, the first pivot line is around 36.25. If that breaks, it opens a bigger cascade down to about 3,500 or just below. All right, mid to long term, the bias remains to the upside. Let's look at silver. Now, silver's interesting because, again, for the longest time, I was highlighting this trend line, which, by the way, in some ways is very similar to the gold trend line. The only difference with gold is it was above the line. Now it's below, right? On silver, really when the line began, it's always been below until recently. But on a positive note, I think we can take something from that, right? So if we look at this and we go back to the gold chart, Here, it really had explosive moves because it was above the line. And even below the line, once it got far away from this trend line on gold, it had an explosive move to the upside. Well, we've been underneath this level of silver for a long time. Now we're finally above it. So what does that tell us? It means an explosive move can happen to the upside. So while silver is obviously has underperformed gold in that gold has been making new all-time highs and silver obviously has not, the trajectory here, and we can even get rid of this trend line. Don't even need this trend line right now, guys. Let's get rid of it. This trend line, just using the same mathematics as this, and let's even get away this one, get rid of this one, right? So this trend line, even getting rid of this, we're now, notice when we were above, we had explosive moves, and when we were below, we had an explosive move back to that line. So the idea is, look at how far away we were on silver here, and look at the explosive move up. Look at how far we were away here from the yellow line. Look at the explosive move up. So the idea is we're now above that line. It opens the door to an explosive move to the upside. That's really important, guys, because again, and by the way, I'm not advocating going long here. I'm looking actually for a little bit more of a pullback before I think about going long. But I will say this, is that the door is now open for silver. And that silver door is open for a move back, not only to 44, which will be a minor resistance level, but 48 to 50 and even above that all-time high. All right, so again, keep that on your radar here. Again, it's above, it's not extended away, so it still has that ability to do an explosive move to the upside. If we take a look at this and we go to the weekly chart, what do we have here? And again, I'll just zoom out to the weekly here. This is that all-time high. So this is your small stopping point along the way around 44. But really, you got to think that the explosive move probably takes you up to $48 to $50. Now, if we look at this chart on platinum, all right, let's take a look at the platinum chart, right? Platinum chart is not as good in the near term as silver. Now, again, it's not horrible, and I still am mid to long-term bullish, but there is a bear flag that until it's negated, I have to be concerned and aware of it. And what do I mean by that? Well, basically, look at this trend line right here. So what we have, folks, is a very simple parallel. Connect the low to the low right to here. And notice how it tried to break down, and it didn't break down yet. But then you connect these highs to right here, and you can see that you have your flagpole here, and this is a flag. Essentially, we would, in technical analysis, a down move with inside bar consolidation is known as a bear flag. It just is what it is, right? So the idea here is that this, in the near term, tells us there could be some downside. But when you zoom out, look at the breakout we've seen. We've seen a big breakout. Here's a longer-term down-sloping trend line, high pivot to high pivot to high pivot. We broke out, which means that while the near term may be negative and maybe even a move down, let's say to, I don't know, 11, 1200, maybe even in the 1100s, if that does happen, to me, after a breakout, it's normal to get pullbacks. You got to be a buyer, or at least I'm a buyer of pullbacks on the chart. So platinum, again, guys, near term may be a little bearish. The bearish really kicks in if the bear flag breaks. Just to be crystal clear here, not all bear flags have to play out. Some can fail. What would be failure? Any daily close above basically 1480. The high here. You close above that high, then this can no longer, it doesn't fit the criteria of a bear flag. And you would expect it to really blast off. So right now, as long as it holds inside of this range, okay, bearish flag, it hasn't triggered yet. That would be a daily close right below here. Then you'd look to buy pullbacks. If it gets above 1480, boom, to the upside. It should explode beautifully on platinum. So really, again, it's the midterm would be bullish, right? But the near term is more gray, where the bear flag maybe says, okay, maybe it pulls back, but then we use it as a buying opportunity. And if the bear flag fails, then this likely goes to $2,000 an ounce. And Palladium here is very similar in that way, right? So Palladium's been in a long downtrend. You're starting to see a potential breakout zone here. So one of the things I've been watching very closely on this chart of Palladium here, you can see kind of a trend line. Maybe this isn't the best one, but nonetheless, I think we can kind of see how price, and even price actually looks like it goes back. Wow, does it actually go back all the way here? Yeah, it looks like it does. So let's get rid of that line. So here you have your low, it broke below, and then look at how it respected. Boom, came here, went up here, tried to break out. Nope. came up, broke out, consolidated, went higher, pulled back to the scene of the crime again. So essentially, anything in this range is a buy, right? I mean, obviously the ideal would be back to about 1075, but this is a bigger breakout pattern formation where it was above this line. Wow, look at this. Holy cow. It goes even back further. But essentially it was above the line, right? And look at it when it got extended, it came back to the line. When it got extended, came back to the line. When it got below and got extended, it fought back to the line. Now it's back above. It's not extended yet. So this can go significantly higher. I have about an $1,800 price target on this, which is about what is that? About 60% higher, 65, 70% higher. I love it. Again, I think the key is watching for a pullback. I'd love to see a little bit more downside, but Palladium looks great to me on a mid to long term basis. Lastly, copper. Copper doesn't look so great. All right. You have a long term trend line here. Okay. Big drop. And what type of pattern is that? A bear flag. And then listen, it hasn't triggered yet. But the problem is, unlike platinum, copper would have to go up so far to negate its bear flag. Listen, it can happen, but it's very unlikely. All right, so the idea is if it breaks here, it's going down to 420. 420 is your downside target. That's where I think it's going. Then we'll have to reevaluate. But again, bearish pattern on copper. Lastly, nickel. Nickel's kind of a cool chart here because nickel has actually looks to me like it's broken out. All right, now it's not flashy and sexy, but it's been beaten down. But look at the highs and the lows. High, low. And then look, high, pull back, high, pull back. Starts to break here and it's going up. So it looks like it's finally establishing itself above this parallel, which gives you a bullish bias to the upside. Really cool charts. I mean, I got to say, I really liked going over it as educational videos go. Today, we went over a key principle, which is that midline trend line that price is above for a while and then below for a while, and how when it gets extended from that line, it's almost like a rubber band where it extends and then gets pulled back to that level. And I think that's really, really important to understand. And it can help guide us to saying, okay, it's broken above this midline. It can go a lot higher, like on silver's case, for instance, and vice versa on gold. You could also argue that on gold as well, as it showed us that it could do charts as well. All right, guys, thank you so much for tuning in. Love doing these videos. Tons of power-packed education helping you guys hopefully understand the charts better. And then obviously some alpha with biases and forecasts as well. Have a great one, guys. Thanks again for coming out and spending time with me.